Hey friends, Sean from SGTReport.com here with a very important economic update, which includes an update about Bitcoin, Bitcoin futures, and gold. And I want to show you a very impressive chart that shows Wall Street's ability to crush just about any stock they'd like at any time. And in this case, it relates to Bitcoin. This chart you're looking at right now is the chart on December 5th for GBTC, which is the over-the-counter fund, which gives investors exposure to Bitcoin. Now, because there's such huge demand for Bitcoin from investors with IRAs and other types of brokerage accounts, GBTC has traded at a premium to the underlying Bitcoin asset throughout its history. Sometimes as much as 100% premium, more recently 70% premium. So it could be argued that investors are playing the arbitrage between the real Bitcoin price and GBTC by shorting it. But I'm here to tell you that moms and pops and the average Joes that have gotten into GBTC as a way to have exposure to the Bitcoin price are not shorting their own asset. So what's happening here is that coordinated Wall Street vampires are showing you how these Wall Street insiders can get together to short the asset. They can't short Bitcoin on the open market, but they can get together and they can probably naked short GBTC and cover intraday. Now what's amazing about this chart is GBTC was down at one point today 25%. While Bitcoin itself was up nearly 5%. Does that sound like a free market to you? Does that sound like real, true market price discovery? Or does it sound like a group of vampires got together and colluded to short GBTC and to profit at the expense of others? My fear is that's the exact same game plan they have with Bitcoin futures. There's an article about that over today at Zero Hedge, Bitcoin Futures and the Need for Control, authored by Tom Luongo. He writes, I've been asked by a few subscribers to further discuss the potential effect of the major exchanges starting up futures trading in Bitcoin. Last month, the CME Group and the CBOE, Chicago Board of Exchange, announced they would begin trading futures contracts in Bitcoin due to popular demand. Now guys, as I've previously shared with you, Terry Duffy, the CEO of CME Group, is absolutely foaming at the mouth to get this thing launched so that, in his words, investors can short Bitcoin. Now getting back to this article, the SEC fast-tracked approval because what the big banks want, the big banks get. This is called regulatory capture for short, he writes. Trading is due to begin on December 10th. Now, there are a lot of issues here, but the main thing is that these are cash-settled contracts, which means that for all intents and purposes, these are dollar-based bets on where the price of Bitcoin is going in the future. It has absolutely nothing to do with Bitcoin other than the manipulation and betting on the price. And my bet is that they're going to try to manipulate the price lower, just as we saw today in GBTC. Could they do it to Bitcoin? Cliff I says they're going to screw the pooch on it. It won't work. And since Bitcoin is a 24-hour-a-day freely traded market globally, it's going to be very hard for these criminals to get away with it without being spotted. But as we've seen in the gold market, they often don't care if they get spotted. I don't think what we saw today in GBTC is any coincidence, because at the same time, somebody dumped $1.5 billion in notional gold, which broke the price lower below key support and dropped it to 4-month lows. If you think gold and silver are a threat to the banking elite, guess how they're feeling about Bitcoin and cryptocurrencies. Now, I'll just give you the cliff notes on this article at Zero Hedge. You can read it for yourself, but he writes, futures markets are a function of coordinating supply of an asset with time. If you anticipate the future need for a few million barrels of oil and want to lock in your future liability to obtain the oil, you buy some oil futures, which will deliver you that oil by that date. Now, of course, you're not going to get delivery of any Bitcoin. This is merely a Wall Street avenue to profit from the rises and profit from the falls when they short it. And believe me, they will. By contrast, he writes, a cash-settled contract is, in effect, no different than a CFD offered by a forex broker. A CFD is a contract for difference, which are simply bets on the movement in price. They are divorced from the underlying asset and do not affect its supply and demand like an asset-settled futures contract does. So, in short, the tail wags the dog in this case. And the question on everyone's mind is how much an effect will this be on the Bitcoin price? And Tom writes, it will simply make high-frequency scam trading and spoofing in Bitcoin an official part of the market through the creation of a near-infinite supply of dollars and the issuers of that supply will use those price moves to push or pull the Bitcoin market itself to fit the needs of the banks and exchanges whose business is most threatened by Bitcoin's existence. And Tom concludes the way forward. There is a silver lining to all of this. Bitcoin is not an asset where the existing power structure can coordinate pricing worldwide 24/7, as they do, I would add, with gold and silver, and Bitcoin trades, much to the consternation of everyone in power, 24/7, 365. Gold is easily manipulated up and down because, like all other assets trading on official exchanges, gold closes on Friday afternoon and doesn't start up again until Sunday afternoon. That is not the case with Bitcoin and cryptocurrencies. That may be our saving grace, and it may be why Cliff High is right. We shall see. But as I documented with GBTC today, when you put Bitcoin into stock form and give the Wall Street vampires access to the market, they will send that asset down 25% in one day, even while the underlying asset is up 5% on the day, because they can. And Tom concludes, blockchains operate all day, every day, and there truly is no reason why they should ever stop trading. So the futures exchanges, if they are planning on trying to control the Bitcoin price through their derivatives, better be subtle about it, because their entry into this space is supposed to professionalize, and I laugh at that, the way Bitcoin is traded and price discovery achieved. And without 24/7 exchange coverage, they better behave themselves, or the market will lose confidence in the product very quickly, as arbitrage effects will destroy their credibility. Because remember, once the blockchain equivalent platforms are up and stable, there will be a whole new level of trust added to the financial system. There's absolutely zero reason why a blockchain-based coin-settled futures market can't compete with the CME Group or CBOE, at which point we enter into a whole different regime of price discovery. I want to just say one last thing about this creating a free market or creating price discovery. As everybody who owns physical silver and gold knows and has known, that is the biggest bunch of crap in the world. The Wall Street game is to game the little guy. The Wall Street game is to turn you over until every last dime falls out of your pockets. That's what they specialize in. And as it pertains to Bitcoin right now, there's a fantastic free market. If you want some Bitcoin, go mine it yourself or open up a Coinbase account or a variety of other exchange accounts and buy Bitcoin. Trade your fiat dollars for Bitcoin or Ethereum or Litecoin or any of the other hundreds of cryptocurrencies out there. And once you buy it and you take delivery of it in your own wallet, it's yours. If you want to sell it, there's plenty of people that will buy it from you. That's a free market. And the last thing we need are these Wall Street vultures and vampires coming in under the guise of creating a free market or better price discovery, because inevitably it leads to corruption and manipulation. Thanks for watching, and for real news 24/7, visit us at sgtreport.com, thephaser.com, and thelibertymill.com. God bless.
I'm wondering if you can address some of the controversies or maybe just conspiracy theories tied to you, your brother, and the Podesta Group. So whether that's your personal email leak as it relates to Pizzagate, the undisclosed 75,000 shares of stock you received from the Kremlin, potentially violating financial disclosure laws, Uranium One being a client of the Podesta Group, why your brother left the Podesta Group after facing criminal inquiry. As an aspiring person in politics, I'm curious as to how you're dealing with all of these accusations. Thank you.